today's part with the following interruption for a public service announcement.
Welcome to the Investing in Intelligence show, where we talk about artificial intelligence, company stocks, and trading. I'm James here with my co-host Kai, and today we'll be talking about Amazon. I want to remind you that the opinions expressed on this show are just that, opinions. They should not be taken as specific advice to invest in a particular way. So Kai, you were just trying to light up the mic about ASML. I understand you're a significant holder of ASML, so it's a topic on your mind. Would you want to give me your take first, and then maybe I can give you a little bit of my take? It sounds like you might have actually listened to their conference call, so I think you're more better equipped to talk about the issue.
Yeah, I mean, interesting start to the earnings season. Essentially, to give our listeners a little bit of background, we saw basically the chip sector taking a hit this week, and it was due to multiple things. One was the Biden-Harris administration and potentially policy changes, and the other one was ASML. I don't know how. So I had been, that I had contacted you. You and I go over decisions on our investments. And me particularly, I was considering how I was going to invest some of my holdings prior to this earnings season. And ASML was one of those. And so I set a decision timeline for the end of the trading session. And then boom, I guess preliminarily somebody in their company, I don't know the background of this. So I'm not speaking just sort of what I read or hear, but their results got released early. Did you see that?
Yeah.
Early. So I got on there and I'm thinking, wow, is Europe maybe a day ahead of us? It's usually not that far ahead of us. Did I miss the time? Was the earnings today? And 20%, I think we're at like 20%. So ASML was above $800 a share. Currently, ASML is trading below $700 a share. And so it really just knifed right through this sort of support level around 730 to 750. And the results got released early. And then I read through their earnings transcript as well as their the video of their earnings call, and essentially just kind of took a deep dive into their financials to look into, like, when I get out of work or I'm doing something and I look and I see 20%, I'm like, what is responsible for a 20% drop? So essentially what that came down to was basically it was all about guidance. It was all about guidance and some of the moving parts in regards to their fab demand or fabrication plants. And so ASML, for our listeners out there, they make lithography machines, or these EV machines that imprint upon chips. And they are the leading technology in this. And we've covered ASML in an episode, but essentially they've seen different demand from some of these plants. And one of the things they mentioned actually in the earning call was actually a backlog too of their EV systems. So they have this new EV lithography machine, the NE3080 or 3800. And essentially they're seeing really good they're really good feedback in that regard. However, they mentioned just the fabrication plants. Now, some of their guidance really was in line, maybe slightly under of what they were saying, but I don't think it was really worth. I think it's really undervalued and was not, should say, the consequence of a 20% drop is way overdone in this instance. But the reason I'm bringing this up, James, is the bigger picture that is AI, build out, in game, and demand for these EV machines. Should there be concern here? What do you think?
Yeah. So to me, this is more than a chip pullback, more than an AI pullback. It was really a fabrication pullback. So if you look at the nuances in what pulled back, it was really the Fab Five stocks like KLAC, stocks like Lam Research, LCRX, and of course ASML. So I think there's some concern that maybe the chip recession, which had been going on for a little while, especially in certain types of chips, not in GPUs, but in other types of chips, has just prolonged a bit. I don't really see it that way. What I see going on here is that companies are trying to save a little bit of money right now, and that even includes companies like TSM. So if TSMC can use the existing machines, the existing lithography machines that they've got for a little bit longer, that's going to save them on their bottom line and make earnings per share look better, which looks better to investors. It's better for everyone, in their opinion. So, in other words, what's better for almost everyone isn't necessarily great for ASML. ASML wants people to buy new machines. They don't want companies like TSMC to use equipment from Applied Materials and extend the life of their current machines or make their current machines do things that typically they would buy a new machine from ASML for, like smaller size chips. So this is kind of the headwind for ASML. ASML is a significant part of the overall fabrication market, fabrication industry, but look, they're just one part of the overall AI trade. So that's why I think for you, and one thing I want to just wrap up with on that topic is that I own over 25 AI stocks. I own close to 30 AI plays, whereas you're way more concentrated in a smaller amount. So Jim Cramer tells people to own 10 stocks so that they know their companies very well. I don't abide by that. I own a lot of companies so that if one takes a hit, it doesn't hurt as bad. So actually, I'm equal weight pretty much in all my AI plays now. I used to be overweight in certain things and learned from SMCI not to be overweight. So I think you're a little more concentrated, so you're going to feel the hurt a little bit more when something like ASML goes down. But I'm a little more diversified.
I look at this particular example with ASML as a time to get greedy. I mean, for me, if I wasn't in ASML, I would really be looking to get into ASML currently. This is not as concerning to me as some of the news coming out of SMCI. Let me mention a few phrases: market dynamics, customers shift in demand as far as the fabrication plants being delayed, so to speak. Other market segments waiting to recover. Those were some of the language that was used by their CEO. However, strong AI demand. They're seeing really good. Their numbers are really good. 7.5 billion in sales, a gross margin of 50%. They expect 8.8 to 9.2 billion in sales for 2024. Q4, they're also expecting good numbers. So I didn't see a level of concern. Potentially for me, my price target with ASML is around $850 a share. So I think it going right below 800 was probably a reasonable pullback. My personal opinion that this is way overdone, that the pullback is way overdone. That's my personal opinion in regards to ASML. Now, they mentioned good AI demand in their earnings transcript as well as their earnings call. So I am not hearing the same language. Then I'd be interested to see what your opinion out of Nvidia, for example, or TSM. I mean, it sounds like demand is through the roof, or some of the things that TSM has said and Nvidia has said are very good in regards to AI. So the whole question here is, to me, not really a concern for ASML, but overall for AI just in general. And do you see that level of concern in some of the language that TSM is using in Nvidia, for example?
No, there's no concern. I mean, the most recent headline from NVIDIA was when Jensen Huang got on a call with CNBC host and he used the word insane to describe the demand for his Blackwell chips. So I would say there's no real concern with NVIDIA and with TSM right now. I honestly agree with you. I don't think it's a huge issue. I also listen to Chip Stock Investor. They've been super bullish on ASML, calling it one of the top stocks for next year. And they still think it's one of the top stocks for next year. And they're not selling, they're just holding their current positions. So I'm still bullish on ASML. If anything, you've got a better entry point right here. I'm not a holder of ASML because it's not available for purchase on Robinhood. And I'm primarily a Robinhood user. So unfortunately, I don't own any. But hey, if they had allowed me, I would have had an equal weight position in ASML and I would have taken that hit. But I like ASML a lot. And you know what? They can't be subtracted from this equation. ASML makes these lithography machines. They're number one. They cannot be taken out of this equation. Not taking into consideration things like AMAT and other companies, ASML still is number one. No one can avoid their machines.
For me, this pullback actually presents an opportunity. It presents a huge opportunity. I see the headwind being really in these fabrication plants. When you're trying to invest, if you're a large company, and for example, you're trying to invest in, for example, Intuitive Surgical or the robotics platform. However, there's some unknowns that are in the future. You may go ahead and hold off on the purchase of, for example, the NE 3800. So they may sort of say, hey, let's kind of wait. Let's see. There's a lot of unknowns. There's, especially in the United States, for example, the geopolitical issues. China is a significant, I think the most significant headwind for ASML is China. But in regards to their fabrication plants, there may be some plants here and other market segments that are basically waiting in order to pull the trigger, basically becoming a little more frugal in regards to their spending. However, it's inevitable. To me, it's inevitable. They're going to have to upgrade, and the moving parts of ASML is their bread and butter as far as replacement parts, maintenance of these machines, and they are really the leading technology in basically sequencing these chips or writing on these chips through lithography. So let's move on to one of the end games in products that is AI here. And the earnings call for this one may tell more of the story is Amazon. So give me your overall take on Amazon. Let's tie this into ASML. And what do you think?
Yeah, so the question on Amazon is
So I have a question for, let's just start off the bat. We do this at the end usually, but are you a buyer, holder, or seller of Amazon?
I am buying Amazon because they are expected to have massive year over year growth in both their advertising and their AWS segments. And thus, they're a company that's going to continue to grow at double digit rates year over year.
What's double digit rates for you? So for our listeners out there, you said massive. What's massive growth for you? Give me a percentage growth that you're thinking for Amazon 2024 to 2025.
Yeah, so we're looking at 16% growth year over year in advertising and 18% year over year growth in, sorry, I said that opposite, 16% year over year growth in AWS and 18% year over year growth in advertising. By the way, the advertising thing can be a little bit annoying. I don't know if you've gone to Amazon and you type something in and you see like the first 6 things are all sponsored. So you have to scroll down. It's like the same thing as Google. People hate the first links in Google that are all paid advertisements. Well, it's that way with Amazon now. You have to scroll down to see what people are really buying and skip over all the promoted products. So that's their advertising growth. And they're also putting advertising into their Prime Video. But yeah, so those are the high margin segments. Like AWS margins are 30%, whereas their stores margin, meaning just buying stuff online, in-person Whole Foods, stuff like that, is going to be more of like a 5% margin, 5.6% margin this last quarter. So their high margin stuff, like the really profitable stuff, is their AWS and their advertising.
So how does the reason why I'd love to talk about this and go back to a little bit of the basics here is one of the reasons why James and I like to do this is basically asking ourselves a question. Is this company worth putting money in to go long on, investing in because we expect the company to grow over time and make money that way? Do we have a short position here, meaning the company we expect to not grow, post bad numbers, and potentially finally find a short position like SMCI, that what happened to SMCI. The other reason why sometimes you go into financial analysis just in general is to determine credit of a company. Is basically the credit good? So for Amazon, they make money in 3 different ways: retail, AWS, and their subscription, right, James? And so which is the biggest of those 3? And you mentioned kind of one of those.
Yeah, AWS is really big for them. Now, what I'll say about Amazon is that their retail market has kind of been a drag in the past, and also just their investment, their R&D, their capex, their spending has been a drag on profitability and free cash flow. And what the best investors really look at is a company's free cash flow. So I will say they have definitely done well in recovering some of that cash flow, but their capex is expected to go up currently and for the rest of the year. So we'll see on the next earnings call how it looks with their margins and if margins have come down further on stores. Stores, once again, being their online sales, Whole Foods, things like that. Other countries too, not just the US.
Here's one of the reasons why I love Amazon in regards to just basic retail investors is that, again, it's a company that you can understand versus something that's a little harder to understand is like Qualcomm or even what Broadcom does, because it's so broad. Amazon, think of 3 things: retail, AWS, and their subscription services. And so a lot of consumers out there, I don't know if there's a person in the United States, I could be wrong, that does not use Amazon, at least ordering something online, purchasing something, watching a movie coming out on Amazon. And so it's something an investor can understand in regards to how a company makes money. So the retail is by far their largest. It's basically just consumer. And the one thing I love about Amazon in regards to retail that I'm bullish on is the comfort and how easy it is to use. It's a direct to consumer, direct to consumer. I love that. AWS, explain that. And this is really, to me, I think how Amazon is tied into AI as well as some of their retail. But explain AWS in regards to Amazon. It's not their biggest revenue base, but explain to AWS.
Yeah, so AWS is all about cloud computing. Now, what it says here is that $332 billion Amazon makes from retail, what you're calling retail, and then they make about 100 billion in annual revenue from AWS. But the AWS is way more profitable than retail, but nonetheless, as you said, the retail makes a lot more. So let's talk about like AI and cloud computing. So Andy Jassy, their CEO, says that 90% of companies' IT budgets are still focused on premises computing, meaning that not as many companies as you would think have really moved to cloud computing, but there is a huge push towards cloud computing. But even taking cloud computing to the side, companies need to host websites. They need to do basic things other than putting all their data in the cloud, and they still use Amazon for that. So I would say the majority of websites that any given person accesses on a given day probably are running on AWS rather than Google's servers or other little companies like Ionos and Hostwinds and all these other little hosts. Most of the websites you visit, most of the apps that you use are running on AWS for the backend. And people don't realize that. So AWS is very deeply integrated into the internet, the core of the internet. And now they're trying to integrate into AI and AI inference, AI training. So they're having good success with that. And some have proposed that AWS, Amazon, may be catching up or even starting to overtake Microsoft's Azure. Now, AWS, Amazon is a little bit more agnostic on models. So we know that Microsoft owned 49% of OpenAI. So they were kind of pushing ChatGPT models more than other models like Anthropic, which is a proprietary model, or Anthropic's Claude, I meant, or Llama, which is an open source model made by Meta. So Amazon don't care. Amazon says you can use Llama, you can use Anthropic's Claude, you can use whatever you want, as long as you're using us for the AI hosting, the AI inference, the AI workloads. So I think that Amazon, this is kind of one of my big takes on Amazon. I think they're going to catch up and maybe overtake Microsoft for AI compute, because Amazon has been the leader in cloud computing and online workloads in the past, and they will continue to be the leader as we shift into this new world of AI workloads. So yeah, that's kind of one of my big takes on Amazon is that, hey guys, don't think that they're behind Microsoft. They're catching up. They're doing well. And then I have like 6 or 7 other points on Amazon AI that I'd like to make. But if you want to respond to that first, I can.
No, I just want to basically reiterate a few of the things you said. So Amazon, $600 billion of revenue. Okay, 300 billion, half of that is from retail. However, AWS is now 1/6 of that, $100 billion of revenue from AWS, which the profit margin there is much greater than in retail. Now, I would say that has grown substantially. That's 1/6 of their business now. So I just think for our people that are out there listening to just understand what Amazon does and how they make money is number one, retail, bread and butter. I don't think that that's going anywhere. And I think more and more people are going to continue to use it. It's comfortable. It's easy. AI is going to help in regards to selling to the consumer. And then you have AWS, which we have seen substantial growth. The one thing you didn't mention about AWS, which you may, is there's multiple different payment models, which I like. There's tiers of payment. You can pay as you go. You can do subscription services. And so I think it's very variable and consumer friendly. I haven't used AWS. Do you use it for your business, James, at all?
I have a little bit in the past, but what's funny is if you're using something else, it's probably running on AWS underneath. So yeah, AWS is just so deeply integrated into everything. But look, Amazon is doing a lot of other stuff in AI also. So they have a large language model called Q. They say that they're actively incorporating AI into Alexa. So we're looking forward to when Alexa actually beats out potentially Siri. So all this talk about Apple Intelligence, which hasn't really shown up on the iPhones yet, may not show up on the current iPhones that most of us have. But guess what? Those little devices, Alexa devices that almost everybody has in their home, they're listening to music on, they're asking questions to, those things might pop up with AI an AI voice assistant before Siri really gets it properly integrated. So look out for that. Now, if anyone's been on Amazon recently and has looked at an item and scrolled down to look at the reviews, you might have seen Rufus. Rufus is their AI shopping assistant, and Rufus summarizes all the reviews that have been left for a product and tell you the pros and the cons of that product. I've seen Rufus like 30 times. It tells you how much I shop on Amazon. It's probably too much, but I mean, they're doing a lot of other things too. So they've got something called Project Private Investigator, which is identifying defects in products before they ship out. That's an AI project. And then one thing I'm really excited about, and I don't want to jump too far ahead of you here, but one thing I'm really excited about is their work on robotics. And I can get into that more if you'd like me to.
Yeah, that's maybe I want you to address that at one of the last things that we talk about. I really want to hear your, because I think Tesla also, their robot, I mean, sexy, just sexy. I'm bullish on AWS. I am bullish on retail. One of the last things I also want to mention is Whole Foods. I love Whole Foods as a grocery store. And that is also an Amazon based grocery store for our listeners out there. And so you're not just investing in a company that is just AI. For example, a company like Tempest AI, where you're like, hey, I feel really uncomfortable with this. I don't know exactly what this does. Amazon is something that you can understand. It's one of the biggest companies in the United States. And to give you my 30 seconds, I am bullish on Amazon because my price target of Amazon is around 220 and I expect 30% growth. So the average market growth for a year, just the S&P, is anywhere 10 to 15%. Let's just say that 10, 11%. Amazon, I think, is 20 to 30%. And so you're going to get a better return by investing in Amazon. Now, again, I will mention my price target. It's around 220. Amazon's about $185 a share. Earnings the end of this month. So keep track of that. Keep a lookout. I was a buyer of Amazon. I currently hold a position, but I personally don't think this is investment advice, but I was a buyer of Amazon when we had that drop and Amazon dropped to around $160 a share. I was gobbling up as much Amazon as I could at that time. So go ahead, mention the robot for me, what Amazon has in store for us.
Yeah, and you jumped into price issues. So one thing I will say is that Amazon is down 3% in the last 3 months, and Nvidia is up 6% in the last 3 months. So Amazon has underperformed other AI plays, which is why we're talking about it today. So Amazon just hasn't performed quite as well as some of these other AI stocks, and that has brought our attention back to Amazon. So we haven't covered Amazon in full in an episode in the past. We just mentioned it in relation to Oracle and said Amazon is essentially a better cloud play than Oracle. But now we're doing a full episode because, hey, it might be at a decent, I don't want to say it's at a decent valuation because, P ratios are what we look at for valuation or price to revenue in certain companies. But what I will say is it's underperformed. Just in percent change of price over the last 3 months, it's underperformed some of these other companies. So it might be something that you want to look at. It can make up for that pretty quickly, if they have good earnings, if they have better than expected margins, things like that.
Well, I also expect, let me just address that a little bit. I mean, we talked about at the beginning of this month, going into picking over the next month or two what we expect. And two of the companies that I picked were Amazon and MU. And the reason for Amazon is back when it dipped down to $160 a share, that was the time to buy Amazon. That was the time to buy Amazon because my price target for Amazon has always been around 220, 230. So when you're trying to buy something on Amazon, I think it was back in, let's see here. At one point, Amazon went to around $200 a share back in July. For me, that wasn't the time to get into Amazon, but the time to enter Amazon was back on the drop. When it dropped to $160 a share with my price target around 220, that's a pretty good return. So they're also timing of when you enter some of these equities underlying, it can make a difference.
Yeah, and in relation to that, their forward PE sits somewhere between 24 and 34, and that is a huge range. So when I say forward PE between 24 and 34, what I mean is the most optimistic analyst estimate for next year's earnings puts them at a forward P of 24, and the average analyst estimate for next year's earnings puts them at a forward P of 34. So if you want to throw a dart somewhere in the middle, you could say maybe their forward PE is around 28 if they do okay over the next year. And maybe if they do really well, their forward PE is at a current price to earnings of 24. And that means it's a good buy right now. So investing always depends on how well you think a company is going to do. How well do you think they're going to do in the future? Not just next year, but the year after that. And one thing that excites me about Amazon is their work in some of these critical fields of expansion. So are they second to Tesla and SpaceX in satellites and in robotics? Maybe, maybe not. Let me just make a couple comments on that. So I would say they're definitely second to SpaceX in satellites. They're doing a Rufus satellite project right now. They're launching satellites so they can provide things like television to South American countries, and that's exciting. But in robotics, I would actually question whether or not they're behind Tesla in robotics. Now, let me just play a really quick clip here, which I think is fascinating. This shows one of their robotic fulfillment centers.
Well, on Tech Today, you often see all sorts of robots and gadgets and devices and EVs. And then on other days, I'm in the middle of Massachusetts here.
So this gives you some more.
What are we doing at this facility? And
make the jobs easier for our employees, make us future.
So what you see in this video, you see a couple types of their robots in this video. You see they have a robot that actually moves things around on the ground. So it looks like a Roomba, but it moves huge containers of Amazon packages around. And then you see an arm robot there. So they have these facilities which are becoming more and more robotic and relying less and less on human employees who may be injured, who can't work 24/7. So we know that Tesla uses robotics heavily in their factories, but Amazon does probably to a significantly larger extent than Tesla. So I actually like their work on robots, and they're partnering with a new company to test humanoid robots in some of their new fulfillment facilities, and actually using those humanoid robots to replace some of the last functions that a human fulfillment center worker would have used. So that to me is a big deal. And we know that humanoid robots are potentially something that people are going to buy as if they would buy a car in the future. So it'll be a similar price point to a car, and it'll add a lot of convenience to people's lives, maybe 5, 10 years from now. I think Amazon can be a leader in that field. So to me, some of these other things they're doing really add a lot to the underlying growth story. I'm almost more excited about that than I am about some of the things that Meta is doing, like the metaverse, for example.
Yeah. I'm more excited about Amazon than I am Meta. I think Amazon has better bread and butter numbers in regards to their financials and growth that Tesla has currently. However, it is pretty exciting what Tesla's doing. Their Optimus robot is pretty cool. And I don't know about the price tag. I don't know about the price tag. I mean, if you're saying a family could pay $1,000 like they would on an iPad or a computer, and then have some robot help them do laundry, everyday tasks, mow the yard, I think that would be a for sure thing. Are they going to spend and allocate the money that they would spend on a car? I don't know, James. I really don't know. But we'll see. We will see. Tesla may take over the world at some point.
Yeah. So to wrap up on my take on Amazon, I will say that I am buying Amazon because of their excellence in both advertising and cloud computing revenue and growth, close to 16 or 18% per year. And because Amazon has new segments like satellites and also robotics that pose a promising future for AI, and their growth continuing into the future.
You equal weight? Are you equal weight? I mean, let's get into, I know you have never, I've been a pretty large holder of ASML for a long time because of what they do. You don't, you basically primarily utilize Robinhood as your brokerage account. So where are you on Amazon? Is that just an equal weight part of your portfolio?
Yeah, it's just an equal weight part of my portfolio. I think that Amazon, I guess what I would say is they're hindered by their retail segment, but they're hindered right now. It's not to say that they can't make retail more profitable in the future. And with things like AI and robotics, retail could, and automated delivery. We know that Amazon has experimented with drone delivery and things like that.
Let me narrow down on you. You've mentioned that a couple times really quick before we go. Why are they hindered?
Look, just certain things are more profitable than others. Like it's well known in business that restaurants are a very low margin business, just not super, super profitable typically. Well, that's the same with retail. Retail is typically supermarkets, retail stores, And in the case of Amazon, their online retail business, I mean, they have to run their own shipping department. It's extremely expensive. Costs are very high. There's a lot of humans employed in these fulfillment facilities and also in their shipping department. So, they're slicing off a little bit of the pie from people who are selling all these products. But, you know, for the most part, Amazon isn't directly making and selling products. They do have their Amazon Basics brand, but mostly they're just taking a little commission from other people who are fulfilling these orders. So it's a low margin business. It is a drag on Amazon, but with things like AI, automation, and autonomous delivery, which is coming. We just saw Tesla release a new RoboVan. He called it the RoboVan. The RoboVan is potentially a delivery robot. We know that costs are going to come down for a lot of the core inputs into Amazon's business, and that will make margins go up over time. But this is not a 1-year story. This is a 2, 3, 4, 5, 10-year story. So things are going to change, and I think that their retail segment could be even more profitable and have even better margins in the future. So yeah. And then the last thing I'll say is, Tesla has delivered about 27,000 Cybertrucks. Those things are costing each buyer over 100K. Anybody who can buy a Cybertruck would be a potential customer for a humanoid robot. So look, these humanoid robots are going to ship. People are going to use them. The reason that they haven't shipped yet and aren't in use yet is just due to safety concerns, but that will be sorted out. Safety concerns were never a big concern for phones, for social media, for the internet. So eventually we'll tackle the safety problem for humanoid robots, and they'll be out there too.
Yeah. Well, thanks for listening. In regards to these 3 companies, James and I have all held positions. So please don't take our positions as investing advice. Please invest at your own risk. However, let me give you my 3. I'm currently a buyer of Amazon. I'm currently a buyer of ASML, and I am not a buyer of Tesla. What about you, James? Now that's let me say this. That's the current. I'm actually a hold on Tesla, but I hold/sell on Tesla, but I mean I'm a buyer in the future for sure. But I've held a pretty large position on Tesla recently. So go ahead and give me your take on those 3.
Yeah, so I did buy a little bit of Tesla when it dropped down into the low 200s after their event. As I said, am a continuing buyer of Amazon. And then although I can't buy ASML, I did buy some of these other associated stocks like KLA and Lam Research and On and Onto, companies that are part of the Fab Five along with ASML. Applied Materials also, they got punished along with ASML, unrightfully so in my opinion. So I picked up some of them too. So yeah, I'm a buyer of these things. Awesome. Well, thanks for tuning in to our show. Please give us a like or comment. We'll be back in the next episode to cover more AI stocks. You can find all our holdings and trades at investingintel.ai. Thanks so much, Kai.
Thanks, James.
The first revolution is when you change your mind about how you look at things and see that there might be another way to look at it that you have not been shown. You will not be able to stay home. You will not be able to plug in, turn on, and pop out. The revolution will not be televised, and be no rerun, brothers and sisters. The revolution will be live.